All right. Hi guys, welcome back to PKFX YouTube trading channel. So this will be a quick trade update on the EURJPY trade that I took. And also I just want to show another trade that I missed that actually went and hit TP, and another trade that I did not take that also went and hit stop loss, just to understand the potential scenarios that the market is actually presenting to us. And it is not necessary for us to take every single trade. We cannot catch every single trade out there, and we do not need to trade every single opportunities that we are seeing out there. We need to be able to identify the right trade for us at that point of time, which makes the most sense, right? Okay, so to quickly start off with, EURJPY was the pair that I entered. So if I go to the 30 minutes candlestick, and let me just quickly zoom out. So this was the point of entry, and at the point of entry over here, I did mention that this is a counter trend trade because the weekly, as you can see here marked, it's green, it's bullish. The daily is also bullish, but the 4-hour was a sell, and the market was already at the highest point. However, I decided to enter the market for the counter trend trade, because of where the market position was. And if I were to zoom out to the weekly candlesticks, let me just bring closer over here. Okay, so if I were to zoom out over here for the weekly candlesticks, you can see that the weekly candle created a very strong bullish candle, and then an indecision doji candle, which also happens to be pretty much an all-time high for a very long period of time. There has not been any area over here that was retested before this. So it is literally impossible to say what the next candle is going to print. But usually this kind of indecision candle, doji candle, marks pretty much the market top most of the time. It's still probability basis. High chances this may be a local top or a temporary top before the market makes some sort of pullback and eventually goes the same direction, right? The weekly is bullish and the daily is bullish, so I do still expect the market to make a good pullback. See, it can stop even at this structure point over here that looks like a reasonable structure point before it bounces, or it can also come all the way down, which I'm predicting because I see more structure points over here. More doesn't necessarily means better, but I see this as a potential strong structure point for the market to come back and retest what we call as a scene of the crime. When it first breaks off from this area, usually the market tends to come back and retest and confirm the previous resistance into a support before the market rallies upwards. Therefore, this was the reason in why I say that I entered based on the position of where the market was. The previous week closed doji, I'm expecting the market to go down this week. So when the market opened, it did not immediately go down, it actually rallied up, right? And then creating this wick, and right now the market is going down, and I'm hoping that the market will close on Friday, pushing all the way at least to my TP area. I don't know if it will happen. This market has been slow. But if I go on the daily candle, even in the daily candle, if I were to zoom in, you can see that similar pattern has played out before. Like you see, the market created the bullish candle, and then it closed the next day with an indecision doji, and it literally printed out the red candle. So I've been seeing the same pattern time and time again, and this made me believe that, hey, the market has pulled back, and this sort of doji is a good point for me to enter. Now, when I analyzed this market, it was not here yet. If I go to the 4-hour candlesticks, it was somewhere around here where I said, hey, the market has clearly shifted the structure, and most probably the market going to rally back up, where I created in the 4-hour candles, I created an area where it looked like a reasonable resistance, right, that it broke. It has to come back to the same thing, like I said, scene of the crime. So where it broke out, it has to come back and retest this area before it goes back down. So that is why I aimed to make a sell from this area onwards, saying that this is potentially a strong region where the market is going to come, retest, and eventually push back down. And it literally happened the same way. So again, it's probability basis. I'm not saying that I predicted this move, but I'm just saying that the move has been what I was expecting it to be. So I'm happy with the turnout so far. However, ever since I entered, the market has been chopping sideways, been ranging a bit slow. At this point of time, the market could have pushed upwards and hit my stop loss, but I see that this region over here seemed to be acting like a strong resistance, thankfully. So the market went back down again, broke the 4-hour EMA that was building up, came back and retest the 4-hour EMA, came back, tried to retest again, and now pushing back down. So far, the market on a 4-hour basis is still a sell. This was the lower low and this was the lower high. So the structure is still intact until the market breaks down, and then I'll get my new lower low and new lower high. So I'm going as per the structure over here. However, when the market came back and retested this 4-hour EMA and pushed back, this confirmed to me the downward direction is still valid. So if I were to zoom in for the 30-minute candle, so in the 30-minute candlesticks, at that point of time, I saw a shift of structure back to buy, and then this was also a buy. So at this point of time, this is where the decision-making process comes into play, right? You are in profits, but the market has been pulling back pretty significantly. In fact, you can see this wick over here came all the way up to here. So at this point of time, traders has a decision to make. Are they going to continue to hold the trade, close on a break even, or expect to risk the entire stop loss amount? And if it continues to trade upwards, because the 30-minute candle has already shifted from a sell into a buy, this will lead to the 1 hour to also shift, which you can see over here. The 1 hour also shifted into a buy, and at this point of time, this is where the mind game comes into play. And for me, I decided to continue to hold because the 4-hour is still a sell. And when I go to the 2-hour candlesticks, this 2-hour candlestick is technically still a sell as well. It has to come all the way at minimum up here for it to turn into a buy. So I took the risk. I've already risked a stop loss. 70 pips is a pretty good stop loss. And for it to hit, it has to literally come back to almost the all-time high and above my resistance zone and above the round psychological number of 187.500, which is pretty challenging, right? So that's when I decided, you know what, let me see if this 2-hour EMA is going to act as a resistance, and let me see if the 4-hour EMA is also going to try to pull back and make it as a resistance. And eventually the market did, right? I held and the market did. And when the market made the next move down here, I decided, you know what, this has been going on as a good trade. It's just that it has been super slow, and right now it's already Friday and I don't want to hold over the weekends. The minimum I could do is not take a loss over here, so I moved my stop loss to 186.970 into some sort of I would say a small win or a break even. Why? Because I still need to consider the swap fees, which has been pretty high, and the commissions that they will charge when I close the trade. So this will be in slight profits, but at least I know that, hey, this was a counter trend trade, CTT, and I've decided that I don't want to continue risking this amount, knowing that the market has already gone to my direction. And even at this point of time, if it reverses, well, I'm okay with a break even, right? But if it doesn't, it continues to go to TP area, I'll be more than happy to close out, even if it's not at the TP area. But if it's already Friday night, I do not want to be holding over the weekend only to have it reverse out later, because I got to understand that it's coming close to my daily support zone, and it can break through, which I want it to do, but it can also bounce from here. So why do I want to give away the profits that I've already made? So those are the thought process that I have in my mind for this particular trade. I'm going to continue to hold, but I already moved my stop loss down here. It can end up being a break even or in small profits, or if it continues to rally downwards, which would be in my favor, then I'll close it off as I TP for this particular trade. I just want to highlight two things. Another thing is EURJPY, right? So this was a fantastic trade that I did not take. I missed out on this trade because I was expecting some sort of a solid pullback and then a continuation pattern to show in the down move, which I did not get. So to be exact, it was something like this, where I was hoping the market will pull back and then come over here and retest, and then I enter over here instead of just entering over here, because at this point of time it was like too much of an entry point. If I do this, it's the risk to reward no longer makes sense, right? Even if I were to try to make it something like this, it still doesn't make sense, and I'm taking the profit in a region where the next support is coming in. And as you can see, market already started bouncing over here. Market already have some sort of a reaction over here, and the last thing you know, it can bounce back up, right? So the risk to reward didn't make sense, and I wanted to enter over here. Unfortunately, the market pulled all the way up here. If you can see this weak point, right? It pulled all the way up here. It did not come to the area that I wanted it to come, but eventually went all the way to TP. So this was a fantastic trade, easy 1 to 2. In fact, it actually went all the way to 1 to 2.5, 1 to 2.7 almost, right? Which I did not take. So I missed out on this trade, and it's okay, it's fine. As long as I was in another trade, I didn't want to rush all the trades at the same time. Also, this was also an EURJPY pair, and this was an GBP pair. Usually, similar currency pairs tend to move similarly, not all the time, but most of the time I've noticed that. So going for EURJPY as well would mean doubling down on euro pairs, which I didn't want to do at that point of time. So I was like, okay, it's okay, fine. Another pair I just want to show is NZD USD. So this is the reality, right? We expected some sort of pullback over here to retest the EMA and then to rally upwards. The pullback happened, as you can see, precisely to the T, right? It happened. And then the market started rallying up. But for some reason, I did not enter this trade because I felt like, hey, this is a good move. This is a good entry point. I could have done this that I wanted to do. I've been moving this this area from here all the way because I wanted the market to actually break above this area and come back and reconfirm to me that, hey, I'm indeed moving up, because it did not break my previous lower high. So technically, the 4-hour is still a sell. This is the lower low, this is the lower high. And I was waiting for the market to show its hand first, to go up and break and turn the 4-hour into a buy, and then pull back, and then eventually rally, right? So at least I'll have the odds in my favor, right? Which was a good wait, because eventually I keep pushing back this particular entry point. I keep pushing back for a proper entry, and it never really happened. And let's say if I were to enter over here, as you can see, it would have hit my stop loss. So this was a perfect trade that could have been a perfect loss that I avoided because I was being patient. And this is something that every trader needs to learn, including me as well, that we can only learn as we actually take the trades and go hands-on in the live market, which I believe that the more practice that you have, eventually this thing kind of, it lines up in your mind based on your past experience. You'll be like, okay, I've seen this before. Something like this has done before. So I'd rather be patient and wait. And this saved my capital. I did not enter the trade, and the trade actually went to stop loss, which is no problem at all. So not all the time your prediction will become accurate, right? This is a perfect example in where it is still probability basis. It can go up, it can go down. You can only predict based on your analysis, and not necessarily it's correct, right? It could be wrong, but as long as you're waiting for your particular strategy for entries, and if it's not lining up and you skip it and it hits stop loss, well, that's still a win for you because you did not enter the trade and you saved your capital. So these are the things that, the best things that we are learning as we are in live trading, which I like to share to everyone as well. So once again, EURJPY, I'm just waiting for the market to hopefully go down. And if this is a win, I'll close out as a win today. But if it pulls back for any reason up here in the New York Open or the London Open, then at that point of time, it will be a break-even or a small profits kind of trade. All right, guys, that's about it. Thank you so much for your time. Have a good day.